These are the top 5 bookkeeping mistakes small business owners make that cost you time, money, and lots of headache. I've handled bookkeeping for businesses with revenues from $50,000 to $15 million over the past decade, so let's fix these mistakes together step by step. Mistake number 1, mixing your personal money and your business money. When you use your own bank account or credit card for business costs, it makes your records messy. At tax time, you might miss deductions or get audited. Keep a separate business checking and credit card. Make sure every expense like fuel, office supplies, subscriptions go through your business account only. Mixing finances makes tracking and deductions hard and increases your audit risk significantly. Comment below if you've been guilty of this one, you're definitely not alone. If you only look at your finances once a year, right before tax season, you're missing the bigger picture. Your books shouldn't be something you just pull together for your CPA. They should be something you use to run your business. When your records are months behind, you can't make smart decisions about spending, pricing, or growth. You're just guessing instead of leading. What to do instead? Update your books regularly, weekly if possible, monthly at a minimum. Use tools like QuickBooks, Xero, or even a well-organized spreadsheet. The goal isn't just clean records, it's real-time clarity, so you always know where your business stands. Late bookkeeping doesn't just cause tax time stress, it keeps you in the dark. And that costs you way more in the long run. Mistake number 3, missing key deadlines and estimated tax payments. Most small businesses are responsible for making quarterly estimated tax payments, and if you miss them, the IRS charges penalties and interest that add up fast. Here are the critical dates. Screenshot this part. April 15th, June 15th, September 15th, and January 15th. And while you can file an extension for your tax return, here's what a lot of people don't realize. An extension gives you more time to file, but not more time to pay. If you owe the taxes and don't pay by the original due date, interest and penalties still apply. But estimated tax payments are just one piece of the puzzle. You may also be responsible for state filings, sales tax returns, and payroll tax filings. And those deadlines can vary based on your state, your filing frequency, and your payroll size. Some filings are monthly, some are quarterly, and some are annual. And missing them, that's when the penalties are stacking up. Mistake number 4, misclassifying employees as contractors or vice versa. If someone works for you like an employee, but you call them a contractor, the IRS can come back and charge you unpaid payroll taxes, penalties, and interest. Use the IRS rules. If you control what they do, how they do it, when and where, they're likely an employee. When in doubt, get help from a tax pro. The IRS gets copies of your 1099s, bank records, and payment app transactions. If you forget income or claim business expenses that aren't legitimate, you could face penalties or even an audit. Let's recap the top 5 mistakes. Mixing personal and business finances, poor record keeping, missing deadlines and estimated payments, misclassifying workers, underreporting income, or inflating deductions. Avoiding these mistakes is easier than you think and saves you time, money, and stress. How many mistakes are you currently making? Be honest in the comments. I read every single one of them and I'll help you figure out your next steps. If this helped you avoid a costly mistake, do me a favor and share it with another small business owner who needs to see this. Thanks for watching, and I'll see you in the next one.